Hello and welcome to BlackPipper Forex. Today I have come again with another scalping strategy that is really very interesting and very easy for the beginners as well because it does not include any other indicators. Simply one charting tool is used. So it's just like you visually see and get the signal. So let's get started. So the name of the indicator here is Heiken Ashi. This is something like candlestick, but the thing is that it removes the noise. Like candlesticks have a lot of noise, but this indicator removes the noise and it gives you a smooth trend. So, for example, if I remove Heiken Ashi now, and if I just show you how candles look like. So you see there is a lot of noise. Here is a small up wave, then small down wave, then a very small up wave. So these waves are very noisy and they do not give you a very clear idea about the trend, about the entry or exit. So what we do, we go to the navigation bar, navigation panel, and we chose Heiken Ashi here. Okay, I recommend, or you can choose the color of your own choice, but I use red for the bear candle and blue for the bullish candle. Okay, so after selecting the color, then I chose the bar chart. Okay, uh, so when I choose the bar chart on the top menu, it gives you a very smooth directional chart. Okay, so the thing is that the key points here are that you have to keep in mind that one single blue candle that appears, it indicates the beginning of a bullish trend or a bullish momentum. So for that, uh, you have to consider that the blue Heiken Ashi candle that should have at least a reasonable size. A very small size candle may not be considered as a valid candle for the entry point. So for the entry, you should not have a very small candle. So let's take a note here. So the first point is that the Heiken Ashi candle should not be very small. Okay. So the next thing is that once it appears, you simply enter in that area. For example, here, if I spot this area, so this is a very small candle. So we ignore this candle, but once this candle appears, this candle comes up with a share on the bottom. Share on the bottom always indicates the buying interest. So this is a double confirmation for buying here. So this is around 1.3635. So this is your entry point, 1.3635. Okay. After the entry point, you can then like here is my entry. So here is my entry. Okay. So after that, I have to consider two things. One is my risk, and the other is my profit target. So for the risk and the profit target, the important thing is to consider peaks and valleys. I show you what the peaks and valleys are. Peaks and valleys for stop loss and take profit. Okay. For example, you can see this point, and this is a valley. This is also a valley. This is a peak. This is also a peak. This is another peak. This is a peak as well. So the peaks are like anything that appears on the top from where there is a kind of retracement in the form of a shadow or a week of the candle on the upside. That's called peak, and the valleys are like the shadow is on the downside, and that's the point from where the selling stops and buying accumulates. So the valleys and peaks are used for the stop loss and take profit. How? Let me show you. So for example, here is the entry. So immediately I can see that this is the immediate support area. This is acting as a support. If you are a conservative trader, you can use this as your potential area for your stop loss. Okay, for the take profit area, you have to consider again the peak. This is since this is the buy, the peak is here. Okay, so if the peak is too far, or if you think that this is not very realistic, we can see that a small dips or the places where the price retraces throughout can be considered uh, as an immediate resistance level. Okay, I can see this point, and then this point, then this point. These 3 points are like kind of magnet for the market. So this could be your immediate resistance level, followed by this level, and then followed by another top at this place. Okay, so right now we have 3 areas for our take profit, and of course 1 area for the stop loss. Okay, so this is our first target. This is at 1.3673. Okay, and our stop loss is at 1.3616. So from the entry 1.3634, we can see that 16. It's like, let me check. Okay, so it's 18.7 or 19 pips. That's for the stop loss, and first TP target is 38 pips. Very good. That's 1:2 risk reward. So this is a great trade. Even if you close here, if you go beyond that 58 and then 65, it's like 1:3 can be achieved, but 1:2 is already there. Okay, so just enter there, wait for the price to hit your hit your exit area. That's your TP1. And for example, if the TP1 is a bit far, for example, like in the scalping, and we are using since the 15-minute time frame, the target of 38 pips is a little big when it comes to scalping, because scalpers can close the trade with even 3 pips profit as well, for 5 pips profit as well. So 38 pips is quite a big deal. So for that, you can do one thing, that, for example, if you have achieved half of your profit, you can break even your stop loss, or you can run a trail profit. Okay. Another thing that I see just while explaining this, here is another area. This is another peak. this is very recent. So this is at 1.3654, and for that, let me check. Okay, so this is 1 ratio and 19 pips. It's 1:1 risk to reward. So once the price hits this area, you can break even your stop loss. You can bring your stop loss. Sorry for that. You can bring your stop loss to the entry point, and from here you can run your trail stop loss as well. You can put the trail stop loss of 20 pips once the 19 pips target is achieved. uh, and then any single pip that the price moves beyond this area, the stop loss would keep trailing to the up like this. So this is how you manage it. Okay, now comes the point that uh, how to, okay, let me just make the notes first. Manage stop loss with trailing or making it break even. Okay, okay. Now let me explain sell entry on the same strategy. Okay. For example, I see this here, this one candle. Okay, so if I place my entry here, okay, this is my entry, and my stop loss would be slightly above the recent resistance area, recent swing high. I call it peak as well. Okay, this is the peak, and this is a kind of double top as well. Okay, so this is my entry, this is my stop loss. Now comes the point where should I place my take profit. Okay, so so see this point and this point, these 2 points are connecting each other at the same level. So this could be our potentially take profit area. Okay. Now let's measure risk reward. Okay, this is the area to enter. Around 15 pips is my stop loss. What could be the take profit? It's 1:1, kind of 1:1. 15 pips stop, and the initial take profit is 17 pips. So the first condition is like at least we have 1:1. Secondly, I can see where my next support is. So next support is at 1.3653. If I place my next target here, 1.3653, let's measure now from here up to this point, 31 pips. So this is 1:2 risk to reward. Excellent. And the next is here, because of this reference point. Okay, actually this you can see that the price consolidated in this area. So actually what the peak and valley is, whenever you see a consolidation area, you can mark the peak and valley. So this is 1:2. So how you manage it? Again, once your trade runs and hits this area, it achieves 1:1. You can bring your stop loss to the break even, and then you can trail the profit as well. However, trailing is an optional thing if you want to do or not. So once your stop loss is at break even, your risk becomes zero. you can easily make the trade run up till here. Okay, the next thing is like pointy is you can partially liquidate your trade. Okay, so partial liquidation is like if you have a volume of 0.10. So while when the price reaches this area, you can partially close the trade by, if, for example, if you close 0.05, it's good enough, and you keep your rest 0.05 running, and there is a probability that the price may go down and hit your third and ultimate target, or even if it goes against you, it will hit the stop loss at break even, and it won't cost you anything. So this is all, it depends on you whether you want to risk further or not. My own personal style is that I don't believe in partial liquidation, but this is one of the ways that you can use. Okay, so now let's see the points where you should avoid trading, avoid entries, uh, like where you shouldn't enter the trade. Okay, so at the time of news event, do not open the trade. Okay, because the entire purpose of Heiken Ashi uh, is to remove the noise in the market. And at the time of news, you will have a lot of noise in the market. So better avoid it at any time. Okay. The next thing is, as I discussed before, the small Heikin candles should be avoided. You should not trade when the Heikin candle is small. Okay. Then, if price is consolidating, then wait for the breakout. For example, if you see this area, just consider the high of this. So the highs of these candles are almost at the same point. Okay, and if I consider the wick of the first candle, this is the first candle that's making high. If I consider only the wick area of this candle, or the shadow area of this candle, if I mark that area, this is a consolidating area. Like the price goes from here up to here, then it comes down, then it comes up. So I would suggest not to trade in this kind of consolidation. Rather, mark this area like this, with the rectangle, or you can use the horizontal lines, and then wait for the breakout candle. This is the breakout candle. I would enter here at 1.3669 as a buy entry. I would keep my stop loss just below this level, 1.3653. This is 1.3669. It's around 16 pips stop loss, and obviously I would target 16 pips in the profit as my first target. 69 plus 16, 1.3686. Okay, 85. 85. So 85 is here. Sorry for that. Okay. Okay, so here you might have achieved 1:1, and 1:2 is at somewhere around this area, nearly this area. So it's not necessary that you always hit with a with 1:2 target, but yes, you have high probability to hit 1:2 target, and of course when you hit your 1:1 target, that your risk and reward becomes equal at the point. Simply move your stop loss to the break even, use the trailing stop as an option, or you can partially liquidate and keep the rest of the position running. So this is how you can do it. Uh, these are the key points. Um, just revising for the sake of your learning. So the beginners, especially, they may master this very well. Okay, so if the Heiken Ashi candle is very small, do not take it as a trading entry point. Use peaks and valleys for the stop loss and take profit, and manage your stop loss with a trailing or make it break even. You can also partially liquidate your trade. Whenever there is a news event, do not open the trade. If the price is consolidating, then wait for the breakout. Do not enter the market before the breakout occurs. Okay, so that's all for now. If you have any feedback or questions, please leave in the comment section. If you want some specific topic to be covered in the video, just leave your message. You can also contact me through Instagram or Facebook or through my website. Thanks for watching. Take care. Bye bye.